So these new sessions will definitely be recorded. They will be edited. We're going to talk about where to post them, because especially the paid ones, but this one will probably post on the website for the entire industry to see. So what I wanted to share with everybody is basically what's going on in my world with getting back to on-site schools. And from my hopes, this is the last session of online schools I'm going to have. And they go through the beginning of September. And if you would be so kind to just write in the chat, I want to ask everybody, hold on. Are you ready to return to in-person sessions? And I want to tell everybody, I still have deposits with hotels in Palm Springs and, believe it or not, Honolulu, Hawaii, for sessions that were to be held in 2020. So would you guys, yeah? Oh, speak up.
I think it was just Jessica, speaker, was picking up your thing. I don't think she had a question.
So I just want to, first of all, let me know I am going to share information regarding credit card portfolio management in this call. But I want to get a feel, because in my mind, I did go on my first trip 2 weeks ago. I got on a plane for the first time in 14 months. And would you mind responding in the chat if you're ready to return to any on-site sessions, whether it be the processor conferences? Is your credit union ready to return? And as I work on putting the new schedule, yes, I've got Palm Springs, and yes, I've got Honolulu, and I know that's not convenient for everybody. I want everybody to think about good locations, because I've had them all over the country, from Nashville, New Orleans, Dallas, Vegas, California, Boston, Chicago, and I've even held them on site at credit unions. I did one at Redstone Federal Credit Union in Huntsville. That was my last school in February of 2020, and we had about 50 people there. And I've also done one at Hawaii, USA. So if you're interested in on-site at a credit union, if you are a credit union that perhaps wants to host a school, in exchange, you get to have up to 10 employees attend for free. But think about it and let me know where or what you are thinking. And I can't see the chat right now. I took my glasses off, but Eric will be able to share.
I see that Sarah Richardson says, yes, I'm ready to return. Julie Langman says, my organization would like to investigate a customized session with you, perhaps virtually. Sarah Richardson says, Nashville, San Francisco, Seattle. Patty.
I've been to Seattle, San Francisco, and Portland, so I can go back there.
I see Karen Gantz is ready to return. Patty Davis is ready to attend in person, but ECU has become accustomed to the lower cost of webinars.
Oh, okay. Well, I'll just...
Go ahead.
No, I'll just give everybody some background. For those of you who may not know me, I've been in the credit union industry since 1985. I worked at Baxter Credit Union until 1996 under the leadership of Rex Johnson. Many of you have heard Rex passed away in April. He was basically my dad, my mentor. I was very, very close with him. And I've had this business since 2003. And with Go See You Cards, I've amassed about 700 credit union clients. I started doing schools in 2010, and I've hosted about 40 on-site in-person schools. And they're 2.5-day schools. The cost is $12.45. I sometimes offer the early sign-up bonus down to $9.95. All of the processors attend. Sometimes you can get your processors to pay for attendance at my schools. So I'm going to come back slowly, and I'll probably schedule one November, December, or January. I used to do 4 a year. And so I want to get a feel, because it's a big investment for me. But anyway, my overall goal with my business is to share with credit unions basically the work I do when I consult with other credit unions. It is about analyzing expenses, profitability, marketing, weaknesses, strengths, program structure. And my overall goal is to make everybody out there a superstar with your card program. And that's basically it. And I wanted to go over the schedule coming up July, August, and September. And please understand, with these Zoom sessions, I am taking a 2.5-day course and breaking it down into 1-hour sessions. And the difficult part I learned in the first session that we did in April, May, and June was each session typically builds on the other. And what I've decided to do for July, August, and September are the most popular sessions. So I'm glad I checked the calendar, because I thought the next one was next Tuesday, but it's actually on Thursday. So Thursday, we're going to be talking about managing and auditing the income of your credit card portfolio. Let me tell you what that's all about. Credit unions are missing a lot of income. And part of it has to do because of the parameter settings with your processor. You may be disclosing fees that are in your disclosures and terms and conditions that are not being collected. Your interchange income, the processors use various definitions such as net and gross. The majority of you, when you look at your reports and or your invoice about interchange, the majority of you will see net interchange. And that has to do then again with your affiliation with Visa or MasterCard, whether you're an affiliate or principal, and how the interchange flows depending on your contract with your processor. And I always feel the income is your members' money, and it's your job to make sure that every single penny is accounted for. So that's what the managing and auditing of your income is about. This next one is a new session. I did debut it in the last series. What I have found out over the years are your terms and conditions, and I'm just going to be very frank here. If you are using CUNA loan liner documents, which are very, very generic, they are harming you more than they are helping you. And I'll give you a quick overview as to why. Your ability to close accounts because of inactivity, that's not in your disclosure. It becomes a real hassle to get old accounts off the system. Do you score your cardholders at reissue, especially those of you that are doing a variable rate card, or even if you're doing a non-variable rate card? If it is not written in your disclosure, which I've seen so many where it is not, that we are going to score review your credit score prior to reissue and adjust your rate accordingly. Everything that I go over in this session on terms and conditions will, of course, be in compliant with the Card Act, but you'll be surprised if you were to pull out your disclosure now, and you may see that you're still charging a card replacement fee, a statement copy fee, a return payment fee. I can tell you many of you are not collecting those because either the setting is off where it's not being assessed automatically, or it is a manual fee that just isn't being collected. So it becomes a matter of, do we disclose it and not collect it, which is kind of silly, or just get rid of it and make our card look more appropriate. So that session, I am going to encourage operations, accounting, compliance, lending. Bunch of people need to be on that session. For the first time next Thursday, I'm doing 2 back-to-back sessions. A lot of my clients are in-house. I wouldn't say a lot. I would say about 20% of my clients are in-house processing. And with that comes the challenges of getting the data. How should you manage your portfolio? So in addition to doing the full service option, where everybody will get the data sheet that I've created, and I'll tell you more about that in a minute, I'll be able to share the same with the in-house clients, which is more dedicated to them because they have loans instead of accounts. It's a whole different process. And one of the biggest issues for in-house credit unions is getting the data. So I want to help get them straight. Let me go back to my tracking tools. The tracking tools that I have developed and used, when I say a tracking tool, it's what I call in my school the golden ticket. It is an Excel spreadsheet where if you have ever tried to do an analysis on your program, you may have a stack of reports from your processor with each program and a different set of reports. What my spreadsheet does is it will take all of those reports and put your portfolio into perhaps 2 or 3 sheets. You may say, Ondine, why do we need that? We get our processor dashboards. Trust me, you need this. Way back when TMG, before they were acquired by, or they merged with Co-op, whatever the situation was, I worked with TMG and their dashboards were based off of my spreadsheets. My spreadsheets, the data that you input comes from the raw data. The dashboards you see from your processor, they show you what they want you to see. And there's a lot of things that you need to see that aren't there. So my analysis is more thorough in every aspect. It goes into expenses, income, profitability, as well as the state of the database and the portfolio activity. This is something that if you are a marketer, you need to attend this session, because I always tell everybody at my schools, these spreadsheets that I teach you how to use and I provide them to you, it's basically the tea leaves and giving you the marketing plan. It will tell you which programs have strengths, weaknesses, the average credit lines, things like that. And I did do a marketing session and I may add it to this new schedule, but I really want to talk to marketers because I have a lot to share with you. And with all due respect, I think you have a lot to learn about credit card program marketing. It is not just a pie in the sky. It is very specific. It's actually very simple and very cyclical. July 20th, that's going through your card processor invoice and finding cost savings. The one on August 10th is brand new. And the consulting work that I've been doing for clients during the pandemic, and I'm focusing more on that because I'm not able to do the schools. But way back when your program first started, or perhaps you have just recently merged with a new, not merged, converted to a new processor. If any of you have been through those meetings where you do the parameters and the program setup, those are a nightmare. And they're typically huge packages, and every question from address on the statements to, how do you want to calculate these fees, and are they manual, and credit lines and everything. I have found, it's taken me all this time to find them, but I have found that the PCF settings, which stands for Product Control File Settings, are actually costing credit unions so much money. Let me give you an example. One credit union that I have been working with, and now I'm going to be reviewing their PCF settings, they had it set that every account got a statement every month. Okay, bear with me. 10,000 account portfolio, about 9,900 statements were going out every month. But you know what? Only 45% of their portfolio was actually active. Why? And well, that's a whole nother thing, why? But their parameter setting was set that every single account receives a statement every month. That is more money into your processor's pocket. It increases postage so much, which is sometimes one of the highest expenses within your invoice. That's one example. Other examples would include report management. If you process with Co-op or PSCU or Fiserv, which is now going to be using the First Data platform, I challenge you to look at your invoice and go to, there's something that's going to be called InfoSite, or even notes on cardholder accounts that are called CIS memos, CIS details. You're going to see those in the hundreds of thousands. Sometimes, if you're a large credit union, in the millions. Those are charged to your invoice. And again, that goes back to the PCF settings, because I can tell you, when I've been in meetings where credit unions are setting up their control files, you get so brain dead. And then you're at the point the processor or the implementation team will say, well, this is what most credit unions do. We don't want to do what most credit unions do. Another parameter setting error is when it comes to reissues, and I'm talking debit and credit. Most of the reissue criteria does not have last active date. So if you've got cardholders who never activated their card from the first time they were issued a card, and the parameter settings are not correct, you're reissuing a card to the member who never even activated it the first time. So this is a brand new session. I haven't even created it yet, but I was fortunate that one of my clients, I'm not going to say which one, who processes with either Co-op or PSCU, I'm not going to say which one, sent me the PCF guide. So I will be creating, that will be a brand new session, and I encourage everybody to attend that one. And that would be more operational people, perhaps your IT people. Let me go on here. Managing active and inactive accounts. That's a pretty common one. I will tell you, most credit unions out there, 50% of your account database is inactive, even though on your processor dashboard it says you're in the 70s. I can tell you 9 out of 10 times you are in the 50 to 60% active rate, 40 to 50% inactive. We talk about getting all of that cleared up. And the active and inactive accounts, that's going to tie back to your disclosures about, when you're cleaning up your database, you need to update your disclosures so that you are able to close accounts without going through the hassle of managing members and letters and communication. Are you guys bored? Is this helpful? I can't see. Eric, where'd you go?
I hid my video so I wasn't being distracting. Everyone is available to talk if they want to unmute and comment, but I see in chat, Kyle says it's very helpful. Patty says yes. Rebecca says great info. Hiram says yes, it's helpful. So they are liking it.
Okay. And I'm going to apologize. You can see my hair is gray. I haven't had it colored in 18 months. I'm getting it colored again and cut on Friday. So I'm going to look more back to normal. So excuse my gray. The next one, August 17th, that's going to be a free one for everybody. I'm going to go through all of the updates, the trends, the shifts. I'm going to show you videos on this new thing called Afterpay, which is going to be, in my opinion, a threat to the credit unions. And I'll be gathering all the latest data and research as to where we are mid 2020 with the pandemic and what it's doing to card programs. When you get the updates from your processors, those are great. But keep in mind, the majority of them are based on their client data. And I will be going to the industry as a whole in terms of payments, debit, the afterpay. I saw an ad with Neil Patrick Harris the other day that I'm going to show you. And he's going to an ATM and turning money into crypto. So I've got to learn about that so I can share that with you. And I may have some guests from the processors on that call as well, because they have some good experts in that area. The next one, August 26th, that is a new session, and that is a chapter from my book about doing your own RFPs. I'll be honest, I choose not to do RFPs on a regular basis. However, I have done them for some of my nearest, dearest, oldest, and billion-dollar credit unions in the past because they trust me. They know I kind of break the mold. When I do it, I don't do it the traditional way. I will share with you the pros and cons of going to RFP consultants. I'm talking about Cornerstone, CU Engage, SRM, Maple Street, everybody out there. They all have their pros and cons. You want to hear, come and listen. If you want to know how to do it, I will be sharing the chapter of my book and the method I do. I'm a big believer in utilizing any type of RFP is for the employees to soak up all this information and knowledge from presentations from processors. So that's a new session. On August 31st, those of you that know me, I am a big believer in having a non-variable fixed rate program. And not saying they should both be, or it's across the board, but you should have one. A fixed rate program, and I know it's non-variable, I'm calling it fixed. You're allowed to have them and you are allowed to change the rates, but it goes back to the disclosure where you have to say, you know, we're going to score you at reissue. And if your score has changed, your rate may change. We still have to grandfather the old balance and everything. But we're going to be having a meeting with a CEO, and basically I'm going to be interviewing him, and his program is going gangbusters, and he does do fixed rate cards. He does have 10% of total loans. This is a CEO who is completely behind cards 100%. So that may be a session that you want your lending people, your CEOs to attend. And I just strongly encourage everybody to look at it as an option. You can do it. You can still maintain your risk. You can make your members happy. You will be able to grow more balances. And then finally, on September 7th, I've got credit line management, the things you need to know. Most credit union credit lines are less than $5,000. If that is the case with your credit union, you will never be profitable, or as profitable as you could be. The average balance you need to be profitable is $2,600. It's not always tied to rate, but it is tied to credit line. The higher the credit line, the higher your balances will be. And one of the things that is dragging down most credit unions' average credit line are all of those $500 credit lines and secured programs and starter programs. And I'm going to talk about, you know, I got to tell you, 500 is what we did at Baxter back in the 90s. And we did it for Christmas loans or holiday loans. $500 doesn't do anybody any good. When I do the profitability analysis for clients and when I show you how to do them, you're going to see that your secured programs are dragging down your overall profitability. I'm not saying you shouldn't help your members who need it, but if you can't risk giving a member with bad credit at least $1,000 or $1,500, just don't give them a card at all. Let them go build their credit somewhere else or help them build it another way with perhaps an unsecured loan. So each session is $149 per credit union. You can have as many people as you would like to join. The only thing, and you may want to make a note of this, I only need, for the free ones, everyone can register. For the paid ones, I only do it via PayPal because the bookkeeping got too much by accepting checks. So PayPal, you can pay by credit card. Only one person needs to register, and then I request that you send me the emails of everybody else you want in that session, and then I will manually add them to the session. So just keep that in mind. So are there any questions so far? Now I'm going to get in. You're not getting away from this without me sharing some good information with you.
I don't see any questions in chat yet. Just people saying that the information is very helpful.
Excellent. And you know what? For those of you that were on the first sessions with all my technical issues, let me know if having Eric here is making a difference, if you find this format better. The other thing I want to share with you, this is my 2020 Raiders of the Lost Card Manual. This is the book. You can see my notes here, but it gives you an idea, a 300-page manual. This is what I use at the school, and I will be updating this finally when this session is over for the new school. But I just want to, and I do sell these on the website. A lot of it is still very relevant. We've had Raiders of the Lost Cards. We've had Dancing with the Cards. And then this is one of my favorites. I've even got videos to go with this one. This one's Card Wars. So we always have great fun with these. So now I'm trying to advance my screen. Okay, I did that. All right, so here's the fun information. I want everybody, you can screenshot this. Eric is recording this. We will get it and send out a link finally. But hold on, I'm having trouble because chat's in the way. And hold on, I gotta get rid of that. Okay, I'm gonna reduce that. I want everybody to be aware of these numbers. These don't change. Pre-pandemic, anything. This is just the basics for card program management and how your card program should measure up. The first thing, we don't care about number of accounts. We don't care about penetration. Now, you may care about services per member or products per member in another venue, but when it comes to credit cards, it is a loan product. It is our most profitable loan. Excuse me, and you should aim to have 10% of your total loans made up of credit cards. The national average is 6% for credit unions, but ideally, we want to get to 10. There are a lot of credit unions out there that are at 15. That helps your overall net earnings because it's the highest earning product in your portfolio. When you deal with processors, they're always talking in quote accounts. The reason they always talk in accounts is, we can get you to this number of accounts. That's how they make their money. And the more you talk about accounts, and when you look into your database and see that 40% of your database or your account base is dead, lost, closed, stolen, expired accounts, you see where all of this goes wrong. Your average credit line for the entire portfolio should be at least $7,500. That's going to take into account your highs of 20,000, your lows of not 500, but 1,000, 1,500. The overall average line should be 7,500. Your credit line utilization ratio, this is the number that determines when a particular portfolio may need a line increase. And it is determined by taking the average balance divided into the average line by portfolio, and it should be less than 30%. And if anybody has any questions, Eric, as I'm going through this, I'm willing to answer questions as I'm going through this.
Okay, so far there's none.
Thank you. There are two other numbers, accounts with balances and accounts with finance charges. Accounts with balances should be at least 60% of your portfolio. Accounts with finance charges, which generate your finance charge income, obviously, and a key to your profitability, should be at least 50%. Now, this may change depending on a reward program versus non-rewards, but the overall portfolio should be at least 50. Your average balance, you'll see a number called AWB. Remember when I said that my spreadsheets and the processor dashboards don't necessarily show you everything you need to see? Let me explain this. Everybody wants to know how the industry is doing, right? You want to compare yourself to peers. You want to compare yourself to Visa, MasterCard. You want to compare yourself to bank card programs. Ondine, what are the averages? Let me share this with you. And just because I've been in this industry so long and I've worked with so many credit unions and I've seen the numbers, when you're a credit union and you have 50,000 total accounts, but only 30,000 are active, the numbers that you are reporting to Visa are the 50,000 total accounts. That is typically the denominator that is used to calculate average balances, average credit lines, the number of accounts and the true number of accounts is the denominator that determines what all your ratios are. And so all of the stats that you're seeing out there are based on total accounts on file, because Visa, they may go down to active accounts, or the processors may, they may do it by active accounts. But I take it a step further and I will do your analysis, and I will show you how to do your analysis in my teachings with AWB, which is accounts with balances. That will give you a more accurate number. And in my spreadsheet, it will also show, for example, income for total accounts, income for active accounts, income for accounts with balances. Depending on the state of your portfolio, those numbers can vary greatly. Your true active rate should be at least 65%, and I will define true active as we go ahead. Your real inactive rate, you should never have any more than 20% of your accounts in an inactive status. Your status accounts, which are lost, closed, blocked, stolen, deceased, interest prohibited, pending bankruptcy, should be less than 10%. Your 60+ day delinquency should be less than 2. I'm going to, with the charge-off ratio, typically it's 1 to 2. The credit unions that are 2 to 3 take more risk and tend to have more profitability. As the pandemic, I don't want to say comes to a close, because gosh knows what's going on, but as we return to some normalcy where people are returning to work and unemployment stops and all of the stimulus programs stop, charge-offs will likely start going up again. So I'm expecting personally, this is just my thoughts, they're going to be in the 3 to 4% range. Your annual net income per total account, this will be in the spreadsheet as well, should be at least $75. Now, when I say at least $75, that is for credit unions whose average line is $4,000. The credit unions whose average lines are $7,000, $8,000, $9,000, their annual net income per account is typically $200 to $300 per account because they have higher balances. Come on. Okay, so your annual net income per account, you want to aim for at least 75. That's a really low number. Each program on the sheets that I send, you can use it to create your own, needs to be calculated individually. This is a problem for in-house clients when their GLs don't separate income and interchange by each different program. We're gonna review that in that session. And then it becomes your marketing guide. And to have this 4-page sheet show you exactly all the strengths and weaknesses of your portfolio is going to be very helpful. Please know, even with the pandemic, the profitability model does not change for credit unions. And as far as your income goes, your overall, it's derived from 3 sources: finance charge, interchange, and fees. Finance charge be 70% of your revenue, interchange 15%, fees 15%. When I say 70%, that would be for finance charge, it will be for your entire program. You may find on a reward program, the finance charge is only 60%. That's to be expected, but then overall, it should be 70. When we talk about interchange, the reason I want everybody to comprehend this, interchange, even though your processor or MasterCard and Visa are saying we're going to increase your interchange and you're going to be doing well, interchange on a credit card program, unlike debit, is only 15% of your total revenue. And I'm not saying don't spend too much time on it, but you should be focusing more on the finance charge, which means you're focusing on the balance, which means you're focusing on a fixed rate program, which means you're focusing on getting to 10% of total loans. So all of these things basically build on each other. We will talk about interchange in the income session. Your effective interchange in the past, and this was pre-pandemic, was 1.68 to 1.76 of net sales. Just a quick FYI, interchange is paid just on purchases, not cash advances, not balance transfers. In doing some analyses for year ending 2020, I've seen a lot of my clients whose interchange have dropped. And that is clearly because travel stopped, the high expense items that people were charging stopped, travel, business travel, hotels, and the smaller transactions and, home improvement, groceries, gas, all of that increased, and those are lower dollar transactions. However, as we are coming out of this and travel is starting to get back to somewhat of normalcy, going into 2022, we should see the interchange go back up. So you can easily audit your own interchange to make sure you are getting what you deserve and what you have earned. I will tell you, if you look on I think I mentioned this earlier, look on your processor reports or wherever interchange is reported, the majority of you will see net interchange. We don't want net. We want gross. It's our members' money. We want to know what the gross was. We want to know what the fees were, and then we'll calculate our own net. There are ways to audit this, and this does go back to your affiliation with Visa and MasterCard and how the interchange is paid, but we'll cover all of that. But here's a simple formula you can do on your own for now. Your fee income will likely be down in 2020 and 2021 because there's late fee forgiveness, you're waiving late fees, but it is time to do a late fee income audit. And this is where I talk about missing fee income, your parameter settings. Because charge-offs are going to increase, expenses with the processors have been increasing greatly. So this is the time, if you're still doing a 10-day grace period because it matches the auto loan. Is what's written in your disclosure what is set in the parameter? Your minimum payment, if your minimum payment for your credit card is less than your late payment, I'll give you an example. Let's say your minimum payment is 20, but your late payment is 25. The Card Act prevents you from collecting more than the minimum payment. So I've worked with a lot of credit unions who have a $20 minimum payment. I'm sorry. Yeah, wait. I've worked with the credit unions that have a $25 late fee, a $20 minimum payment. And guess what? Every late fee since 2009, they've only been collecting $20. Well, that extra $5 over all these years add up. I did share a story too. I worked with a huge credit union up in the Northwest, and they had recently converted from co-op to PSCU. And this is when I'm going to talk about the PCF settings and that new session that I'm doing. When I was doing their reports, their fee income was way, way down, their late fee income. And further analysis showed that the parameter setting that the new processor put in, instead of putting $25, it was $2.50. So for about a year and a half, this billion-dollar credit union, the late fees they were collecting instead of $25 was $2.50. It equated to over $200,000 a year that they were missing. But due to the contract, this is where you got to look at your processor contract. The processor said we're only responsible for 3 months of that, if it's being our error. So all of these things tie in. Hold on. Oh, here's the minimum versus the late. So check that out. And it involves more than just checking on your disclosure. You got to compare the actual settings with your processor. Talked about the grace period days. The best thing is to do 5 days or less. It is still more generous than all of the bank cards out there. And you can basically almost double your late fee income if you're still at the 10 days, if you reduce it. And I'll tell you the ways how you can calculate or forecast that in order to make that proposal to the credit union. I want to talk about expenses. Your top 2 expenses of credit card portfolio management, interchanged. That doesn't sound right. I'm not talking about interchange, but the top 2 expenses are usually charge-offs followed by processor expense. They're usually number 1 and 2. So I am seeing the processor expenses increasing. For those of you that know me, I do the annual processing expense per account, and I think that's on the next page. It should be $30 to $35 annually. The way you calculate this is check with accounting and find out, make sure that it's just credit expense, because some of the processors include debit and credit on the same invoice. But take your entire credit processing expense for 2020, divide it by the number of accounts on file at the end of the year. It will give you a rough idea. But for a regular size credit union, it should be 30 to 35. If you are in-house, it's typically less than 10. But if you're in-house, that is just the processing. Doesn't include statements, cardholder service, fraud management, plastics, postage, any of that. So I am seeing that number creep up to $40, $50, sometimes even $60. Doesn't mean you got a bad deal. It could be that the credit union is not managing the program correctly. And so that's when we go through the invoice. In the invoice session, I am going to be able to share with you, basically, you're paying too much because of mismanagement or lack of management of the card program, or maybe you did get a bad deal. If you were one of those credit unions that got a huge signing bonus to go with a certain processor, I can guarantee 100% you're making that up in either a transaction posting fee that's usually should be about 4 to 5 cents, and perhaps it's 7 or 8. You're paying for it in a reward admin fee, which should be less than 10 cents. The one I'm working on now is at 22 cents per account per month. So anyway, those are more information about your expenses. I have developed some spreadsheets that I share my information probably too much, but especially those to those clients. It's 1:45. I'm just checking the time. For the people that come to my sessions, I'm all about sharing the knowledge, sharing the wealth. I'm used to people stealing stuff from me. It's happened over the years, everything from my manual to the whole concept of the school. It's just whatever. At this point, I'm giving away all my secrets because I want everybody to benefit from this. So when we do the expense section, I will share with you an expense sheet and how to analyze your processor and talking about your PCF settings, things like that. These are the reminders. I would screenshot this. I mentioned this earlier in the session about things that you should be thinking about. This is LaCroix, just plain LaCroix. I want you to share this with your finance team. Please share it with your finance team or your CFOs or many of us, we are getting infiltrated with bank employees that, guess what? They want to do things the bank's way. Remember when I said our profitability model, and I've got it right here. This is our revenue model because they are loans to us, 70, 15, 15. Look at a bank. Banks make most of their money on fees and interchange. They don't care so much about finance charge income. That is one of the reasons they can take higher risk. They have the higher credit lines. This is where you see the $30, $35, $39 late fees. This is where you see the 2 to 4% cash advance fees. When I see credit unions doing cash advance fees, balance transfer fees, penalty rates, reducing the grace period, shooting the late fee up, increasing foreign transaction fees. And I've even seen some credit unions doing minimum finance charges. You don't need to do that, and you shouldn't do that. The reason you shouldn't do that is your program, if you try and mimic a bank program, here's the bottom line. Their reward programs are better. They partner with the airlines. They've got lounge access. And not that it meant much in COVID or during COVID, but their reward programs are much more robust. That's one session I should probably add is rewards, because if you use your processor reward program, you're likely doing your members and your credit unions a disservice. And I do know Co-op and Member Access Pacific have now partnered with some of the outside. Actually, I think Co-op is no longer, but there's independent reward providers out there. And I highly recommend everybody take a look at those. One is Amplify, which is the former Agio. The other one is Razor Rewards. And the benefit to using an external reward provider is that's all they focus on. That is their main core, their main business. It's also an independent contract. Some of you may be finding that your reward contract with your processor is not aligned with your processing contract. So when you try and get out of one, you're still stuck with their reward program or a huge penalty. If you want me to add a reward session to the schedule, write it in the chat and Eric will keep track of that. And as I'm going through this and we're coming to an end here, if there are any other sessions that I have not covered or are not on the agenda or things specifically that you'd like to learn about, please let me know. And I am willing to add those. And it's all determined whether they're free or whether they're paid. The paid ones are when I'm really giving lessons. The free ones are just information I want to share just for the benefit of sharing good information, like the fixed rate card program and how great they are with the CEO we're going to interview, the mid-year updates, this, so that everybody kind of has a clue what I'm doing. We did that. Stop. So the things you should be focusing on now, let's say, what did you get out of this call? And you don't want to come to the sessions, but come and see what you can get for free. And that's fine. But you can consider doing some of the things I mentioned: the interchange audit, the late fee minimum pay audit, review the grace period, ensure all of your fee income is being collected. And that's basically comparing your terms and conditions to the GLs, to the number of accounts delinquent and the number of fees. Review your disclosure. I can guarantee all, if not everybody on this call, if you're using LoanLiner, when you review your disclosures, there is nothing about, we can close this account at any time. We can lower your credit line at any time. We reserve the right not to reissue if you've had no activity for 6 months, 12 months. What are some of the others? Oh, we have the right to score you at reissue. Just take a quick look at those. And if those aren't, you need to come to my session on disclosures. Your expense control, track and reduce your expenses. Start tracking them. Some credit unions do actually track them. You can't just look at the bottom line and say, gee, well, it's trending the same as it has been, so it's fine. If you are paying more than $30 to $35 per account annually, you're paying way too much. If you are a $1 billion credit union, or if you are giving one processor both your debit and credit business, that number should be more like $20 to $25 per account. The PCF settings, you can check those. You can ask your processor to review them with you, but know that the processor is all about making money, not necessarily helping you run the most efficient program. Excuse me. Talk about reviewing your reissue and review and audit your reissue criteria. The biggest thing here, I think, if you were to ask your processor for a copy of your reissue criteria for debit and credit, you want to look for the field about activity, date last active, or number of months inactive. More than often, I see credit unions in that field, 99 months of activity you must have had if you're not going to be reissued a card. Yeah, who does that benefit? My recommendation earlier this year, and still for the remainder of this year, is just proceed with caution with acquisition campaigns. This is not necessarily the time to be acquiring new accounts. It's not necessarily the time to be doing credit line increases, adding new fees. One thing I want to throw out there, if you are doing a 0% balance transfer offer, and I know a lot of you are, you should not be doing those right now. Honestly, you should not be doing them ever. And it goes back to our profitability versus the bank. I'm not saying that you shouldn't do intro offers with a low rate, but I have a lot of reasons why you should not be doing the 0%. I just mentioned this earlier. And at the bottom, yeah, don't say you're risk-based pricing if you've never done a review of your cardholder scores. You're not risk-based pricing. You're only risk-based pricing if you are doing that regularly, and the time to do that is at the time of reissue. So that is it. I can't see anything. I don't have my glasses on. I don't have the screens up. Eric, are you there?
I am here. I saw that Carol and Kyle are interested in a rewards session.
Excellent. Let me ask you this. Do you want me to do the rewards, or would you like me to bring in the management of the reward companies? Because I've got, for those of you who don't know, all of the reward providers and processors do come to my in-person schools, and they get hammered. But I will, you let me know or put it in the chat, because I can get in touch with the management and put that on the schedule.
Kyle would like you to do it.
I'm sorry?
Kyle would like you to do it.
Okay, just me. Okay. All right, Kyle. Hey, Kyle, will you do me a favor? Tell Stephanie. So I sent out the email, right? And Stephanie was on my do not or unsubscribed list. Yet we just shared an email like 3 weeks ago. So I don't know if she meant to unsubscribe, but can you ask her? Because if she wants to get my email, she will have to resubscribe. I can't add her manually. That would be great if you could ask her. Okay, sorry.
Sarah would like to know, do you work with Blackhawk?
I don't know what Blackhawk is. Is it a reward provider? Sarah, you're from Trainer Fund, right?
She said yes, so I believe that was yes, it's a reward provider.
Yeah, no, I'd love to learn more about them. And I want everybody to know I don't get kickbacks. I don't get referral fees. This is something we're going to talk about when we do the RFP session. There are consultants out there who have ulterior methods of being compensated. I get paid by credit unions. When I do the in-person schools, the sponsors, my processors will sponsor. That basically helps cover the food, the venue, the entertainment, things like that. So please know, and Sarah, since you're new to me, I don't do kickbacks. I don't do referral fees. I've been offered, and it's like, no, because to me, that's kind of crossing a line. I do work for credit unions, their members, because I'm credit union true blue. But yeah, Sarah, you could email me. That would be wonderful. I'd love to get to know you.
I see Dawn says we signed up for a couple of your classes in May that we were unable to attend. How can we see the recordings?
That's why Eric's here. Do me a favor, Dawn. If you can remember the sessions, because of my technical ignorance, sometimes I was forgetting to hit record, or the session is with me getting ready and I'm like way up close to the screen. And let me know which sessions they were. Some were recorded. If you paid for those sessions and you were unable to attend, I will reimburse you for those. So just write it in the chat, because now that I've got Eric here, we can document everything. And it was too difficult before, but I think we're on the right track now. If you like having Eric here, please let me know in the chat.
Oh, look, all of chat says they love having Eric here. First question, they all answered.
Shows you how good I am, Eric.
No, I'm just kidding. But that seems to be all that there is in chat at the moment.
All right. Well, it has been fun. If you want to join in the future sessions, you can register at Go See You Cards. I will add another session. I'll look at the schedule, maybe in September, but I will do one for loyalty. And I want to thank you all for your time. And what?
Actually, you just got a real question coming in right now. Would you like one more question?
I would love one more question.
I'm gonna it says answer live, so we're gonna go ahead and do that. It's from Jessica, and she says, do you recommend reducing grace period days this year despite the pandemic?
No. Oh, for late payment or for the grace period before interest accrues?
I'll wait for Jessica to follow up. She just said, do you recommend reducing the grace period days this year despite the pandemic? But we'll wait and see if she
I think she might be talking about late.
Yeah. And you can put it in the chat if you don't want to submit it as a question again.
Let me it's a very good question. And I want everybody who's still on the call to know, a lot of my sessions are all about investigating, figuring out, and you can't do each fix individually. And what I would do, you can start researching a lot of these things. And if and when you do decide to make a change, because if you're talking about grace periods and late fees,
charge.
and
she said late charges. Yep.
And what's on your disclosure, and if you do want to start actually scoring at reissue, and you still want greater control over closing at high risk accounts, and all of these things will require a change in terms. You need to start making a list. So no, I would not make any changes. I mean, we're midway through the year, but it's not too early to start gathering perhaps all of the deficiencies in your program and getting ready for making changes in 2022. Another good time to make changes is perhaps if you have a conversion coming up. If you do not have a conversion coming up, you're going to change the terms and conditions. You're going to have to justify more than just one aspect. So Jessica, it may be something that you want to consider. And the way you would go about justifying it as to what that would mean as an increase in fee income, you would have to get with your processor and choose a certain time period and say, I want the number of accounts that are 1 day delinquent, 2 day delinquent, 3 day delinquent, 4 day delinquent, 5. And then you can project what the income lift will be by reducing the number of grace period days. But I always suggest, rather than just making any random move, what is it going to mean to the credit union? And you may find if you reduce it from 5 days to 3 days, your fee income may go up dramatically for late fees. If you go from 10 to 5, I can tell you, you will double it. But yeah, I hope that helps. But
yeah, that seems to be all of the questions. Jessica said yes. Thank you very much.
Okay, and for everybody out there who's on the first sessions, now that we've got Eric, and if you enjoyed this session and they're running a bit more smoothly, I'm going to get the word out, and we're recording this, and I'm going to make sure everybody that this is put on my website and social media, so that everybody can see that, yeah, I'm not a technical person, it's just the way it is. But all right, well, with that, it's 5 after 2. I'm going to end the show. Thank you, everybody, and I will talk to you later.